Warren Buffett just revealed what he's doing with his wife's inheritance. And Wall Street is furious. The man worth over $100 billion who built his fortune picking individual stocks is putting 90% of her money into, wait for it, a simple S&P 500 index fund. If that doesn't blow your mind, what I'm about to show you will change everything you thought you knew about getting rich. Now, before you think this is just another boring investment video, understand this. Buffett bet $1 million that what I'm about to reveal would beat Wall Street's best hedge fund managers. And he didn't just win. He absolutely destroyed them. If you're serious about building real wealth and want to learn what billionaires actually do with their money, hit that subscribe button and turn on all notifications. This is information the financial industry makes billions keeping from you. Let me take you back to 2007. Warren Buffett, the Oracle of Omaha himself, made a public bet with Protégé Partners, a hedge fund company. The terms were simple but brutal. Buffett would put his money on a basic Vanguard S&P 500 index fund. They would choose 5 of their best hedge funds, the kind that charge massive fees and claim to have secret strategies that beat the market. The bet was for $1 million over 10 years. These weren't amateur investors. These were the hedge fund elites with armies of analysts, AI-powered algorithms, insider connections, and decades of experience. The result? It wasn't even close. By 2017, Buffett's simple S&P 500 index fund had returned 125.8%. The hedge funds? A pathetic average of just 36%. Buffett didn't just win. He exposed the biggest lie in finance, that you need experts to get rich in the stock market. Here's where it gets absolutely fascinating. Buffett gave us 3 earth-shattering truths that most financial advisors will never tell you. In his instructions for his estate, Buffett specified exactly what should happen to his wife's inheritance. His exact recommendation? Put 90% into a low-cost Vanguard S&P 500 ETF and 10% in short-term government bonds. Think about that for a second. This man spent 60-plus years picking individual stocks. He turned $10,000 into over $100 billion through stock selection. Yet for his own family, he's saying, don't do what I did. Just buy the index. Why? Because Buffett knows something most investors refuse to accept. What worked for him requires a level of discipline, patience, and skill that 99% of people simply don't possess. Here's a stat that should terrify every financial advisor watching. Buffett revealed that roughly 90% of professionally managed funds fail to beat the S&P 500 over time. Let me repeat that. 90% of the so-called experts, people who went to Harvard Business School, who manage billions of dollars, who have teams of analysts, cannot beat a simple index fund that you can buy in 5 minutes on your phone. And yet they charge you 1 to 2% annual fees for the privilege of underperforming. It's the greatest scam in finance, and Buffett called it out publicly. Here's the most powerful fact Buffett wants you to know. The S&P 500 has never lost money over any 20-year period in its entire history. Not during the Great Depression. Not during World War II. Not during the 2008 financial crisis. Not during the COVID crash. Never. This isn't luck. This is the power of owning a piece of America's 500 largest companies. Companies that adapt, innovate, and grow regardless of what's happening in the world. Now let's talk about something that might seem boring but is absolutely critical. Fees. Buffett specifically recommended funds with expense ratios as low as 0.03%. That means for every $10,000 you invest, you pay just $3 per year. $3. Compare that to the average actively managed fund that charges 1 to 2% annually. On that same $10,000, you'd pay $100 to $200 per year. That might not sound like much, but here's where it gets insane. Over 30 years, those fees can cost you literally hundreds of thousands of dollars in lost compound growth. You're not just paying the fee, you're paying the opportunity cost of what that money could have earned. This is why Buffett said in his 2017 shareholder letter, "My regular recommendation has been a low-cost S&P 500 index fund." He's not being casual. He's giving you the blueprint to wealth that took him 60 years to validate. Here's the tragedy. Even after hearing all this, most people watching this video won't follow Buffett's advice. Why? Because it's too simple. It's not exciting. There's no story to tell at parties about how you discovered an index fund. You can't brag about your genius stock picks. But here's what you can do. Get rich slowly and predictably. The strategy is absurdly simple. Buy a low-cost S&P 500 index fund. Invest consistently every month, no matter what the market is doing. Never sell during crashes, actually. Buy more when everyone else is panicking. Wait 20 to 30 years. Retire wealthy. The hard part isn't the strategy. It's having the emotional discipline to stick with it when your coworker is bragging about their crypto gains or when CNBC is screaming about a market crash. That's why Buffett said, "The stock market is a device for transferring money from the impatient to the patient." Warren Buffett is 94 years old. He's seen every market cycle, every crash, every bubble, every recovery. And after all that experience, after building one of the largest fortunes in human history, his final advice is this: just buy the S&P 500 and wait. The man proved his own point by betting $1 million on it. He's putting his wife's inheritance into it. He's told shareholders for years this is the right move. The question is, are you going to listen to the greatest investor of all time? Or are you going to keep gambling on stock tips from strangers on the internet? If this video just saved you from making expensive investing mistakes, show some love. Hit that like button, share this with everyone you know who's trying to build wealth, and subscribe with notifications on. I'm breaking down more billionaire wealth secrets that could change your financial future. Remember, Buffett's secret isn't complicated. It's just incredibly difficult to follow because it requires patience in a world that worships speed. But that's exactly why it works. See you in the next one.